strength increasing.
Fibonacci, the bread and butter of my system and one of my favorite strategies ever that I possibly could ever trade with. If I had to pick one thing to trade with, it's the Fibonacci. Helps generate me consistent results like these here, time after time. And it's a mathematical sequence. You can find it all over in nature, Earth, pyramids, the galaxy. It's a sequence that keeps repeating. Everything in trading is pattern recognition, right? And you can see here that one of the golden ratios is 618 or 1618. Okay. So you might think, well, how does that affect trading? Well, I'll show you. Excuse me. This is where I drew the Fibonacci to show where I engaged in those results that you see here in Discord. I was actually shorting the market to the 618 area, and I just stopped trading after that point, and I could have longed it from there, but just wanted to show you that. So Fibonacci, you have this little indicator right here on your left, third one down, it's at the top. When you draw it, you have a point from start to a point of finish, and it's usually from the bottom of a wave to the top or from the top of the wave to the bottom. And I'll show you what I mean here. Okay, so what is a wave? Well, wave goes like this for the market in an up pattern, and a wave goes like this for a down pattern. All right, so this was a wave, the bottom of the wave, and it broke up all the way up here to the top of the wave, and it broke above a level of an area. Okay, so this would signify a couple different things. This would signify that the trend should continue on, and if people liked or institutions bought the price that sent the level way up this high, more times than not, it's going to come back and they're going to grab more and send it back. Now, that doesn't mean that they're going to keep the trend going. It just means that generally you're going to get a reaction on that area. Okay. And it's a reaction that you can consistently deploy. Now, you can see here, because the wave started here and it ended here, I'm going to take my Fibonacci, go from the bottom of it all the way to the top, and I do include wicks, and I try to be crispy. What I mean by crispy is I try to be very, 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 very precise. Okay, because it's scary how precise this stuff is. All right, and so you can see that the price started here, it went all the way up here. Now what happened was it did its little thing, it got reactions a couple of different areas, but look where a massive player stepped in. Either multiple people, institutions, a massive person that was buying, whatever it is, it sent the price and immediately gave this green reactionary candle straight up. Okay, now that's not random. This isn't a cherry picked area either. I'm going to show you multiple examples, and you can see how repetitively this will go, because and everything is in a fractal as well, which is hard for a lot of people to understand, but I'm gonna show you here. So that's a big wave here. Now I'm zooming in, as you can see. Now look at all these other little waves. Okay, now if I go here, see how the price went from the bottom of this wick here to the top of this wick. I drew the Fibonacci. Price retraced, went up and down, and boom, it hit this blue Fibonacci area and it sent it up. Now I have these other levels up here, 382, 236, 0.12, because usually what happens is if it hits 618, it's going to go to one of those three areas, and that's where I'm exiting my trade. Okay, so it hit the 618, and it went all the way to the 236 on this one. All right, same thing here. Look at that. From the bottom of this wave that sent the price way up here, this is where I put the top of this. Look at that, it hit the 618, went to the 382, 236, and the 0.12. Those are your three take profits. Now look at this wave. Same thing. See? From that to this, look at that 618, 382, 236.12. I mean, it is ridiculous. Okay? See, from the bottom of this to this, 618, all the way up to those three areas. Okay? Now, okay, you will take a loss once in a while. This one here, from the bottom to the top, look at that. Well, I mean, it depends on where you exit your trade. Okay? Some people exit your trades below the bottom of this wave, right? So if the exit is the red line, some people might have taken a loss because they said if it goes below this area, I'm not, I'm not risking it. It could just keep dropping, which you never know what's going to happen. Anything could happen in trading, right? So that's just a precautionary measure. Look how many trades you just won. You can accept a loss. Don't be greedy. Look at this one here. 618. If you would have held this, I mean, you can see what kind of reaction you would have had there. And then I'll zoom out a little bit. That ended up being the first area that I brought everybody into. See that? Boom, 618. So, I mean, and it works in every type of market, right? So now if I go down to the bear side, where everything was going down, okay, look at that. From the top of this to the bottom of the wave, 618, it hit all three orange areas and it kept going down. All right, look at that. This one is a little funky. Um, I hit the 618 and it looks like it dropped all the way. And if you would not have exited at one of these three markers here, it would have came back, retracted, went up again, and then it could have taken you out at this level, depending on how you played it. Some people do candle close. If you play it candle close, then that means you'd have been okay. And what candle close means is, see how this is a wick here? They wait for the candle to close a time frame. This is a 5-minute time frame, so they'd have waited for the next 5 minutes to see what this candle did. Now, if it would have say, like, let's just say I use this, I'll erase all this stuff here. Say I use this area as a stop loss, and you see how this had a green candle close above, that would have been a loss for some people, right? Versus this was not like that. It was no thick candle, it was a wick. So some people would have stayed in the trade and went down. I personally jump out the trade because candle, I've had it to where sometimes, yes, you get a wick, but sometimes a wick is so massive. I mean, it could just be a ridiculous wick and then come back down. I don't want to take that risk. I'd rather just jump out. All right, because as you see, there's always another opportunity. There's endless amount of opportunities to play this. And if it doesn't work, if it doesn't hit your level, well then don't do it. Look, boom, from this area, this is I mean, you could have pulled it from here to the top, and that would not have been a trade because it would have been from the top here all the way down, and it wouldn't have been a trade. Depends on how risky you like to go. I like to go a little bit more on the risky side because I get a million different opportunities. So I know if it doesn't work on this one, it'll probably work on the last one. See, it worked on this one. Same thing from here to the bottom. Boom, hit the 618, immediate reaction. I mean, you can see how violent the reaction is sometimes. Like it hits it, wicks it, and you top tick it, which means that it came straight up to this area and it didn't mess around. It's immediately hit this area before. If you didn't have an automatic buy in there beforehand waiting to buy that, so it just hit your level and it put you in the trade, you wouldn't have been able to react fast enough to get yourself into that trade. That's algorithm stuff for you. That's why this works so well, is because this is algorithmically traded. Institutions do this. Okay, if something is in a downtrend, you can see my indicator, custom indicator I built, shows that it's red. It means it's downtrending. So that means I could pretty much take every top wave to the bottom of the wave. Okay, and I'll redraw it again here. I'll take my Fibonacci from the top to the bottom of the wave, and price will go from here down, and it'll come up and hit this area and come back down. Okay, and so you set this up before time. So if you're here, okay, this is what you see right now, and you're waiting to do something. You're waiting for, like I said earlier, a break of an area. So this was a floor or an area that you've previously got some type of reaction from, right? You had a breakthrough, including a candle close. It wasn't a wick. You get the full the full red candle here. So now what you're going to do is you're going to launch your Fibonacci tool, go from the top down here. And if it keeps, let's just say you're right here. Let me extend it this way a little bit. Let's just say you're right here at this point in time and the price keeps dropping. Keep moving your Fibonacci tool down. Keep moving it down. Okay, and you see how it went from this level all the way up here and it didn't hit the 618 yet and then went down further? Well, guess what I'm going to do? I'm going to drag my Fibonacci tool down further until it hits the floor. And then when it comes back up, I know that that was the floor in the meantime, right? And if it goes down lower, well, then I'll keep moving my tool down lower. But if it's not, and it comes up to this area, it'll usually come up to the 382 and kind of stall a little bit, and then you'll know, okay, I've picked some at the bottom, and I'm waiting for my retracement. Okay, and then boom, look at that, hits the 618, straight back down. And like I say, I mean, you can go back to pretty much any area. See, there's blue area here. I go from the bottom of this to the top of this area. Price retraces down, hits the 618, immediately goes up to the orange areas. If you jumped out, you would have won the trade. If you wanted to get back in, you could have bought in again and then go straight back up again, and you would hit all of those areas again the second time. Go to this wave here, from the bottom to the top. Boom, it's a 618, goes to the 382, 236.12. Again, guys, keep it simple. It's funny. The simpler you keep it, the more money you'll make. You could even stick to one time frame. Everything is fractal. See, I'm on the 5 minute here. Every candle is 5 minutes. If I go to the 1 hour, every candle represents 1 hour of time frame. Okay, now look at this. From this bottom of the wave, it's blue to the top, hits the 618, 382, 236, almost to the 0.12. And if you'd have held the trade, you could have hit these top levels here. You could have also exited and jumped back in, because guess what? The price came back from here to this level again. Did Well, I guess it almost wicked you out and then it jumped off here. Okay, so that's the Fibonacci tool. Again, keep it simple. Keep it simple. You know, there are areas where you will lose depending on how you play. I would have taken that loss. Other people that were waiting for candle close, you'd have made that trade. Um, but yeah, so define your trend, launch your Fibonacci. That's it. 2 steps. Have a great day.